What's up, team? Hope everyone's good. Welcome back to another weekly market analysis following the trades that I've got open and following some trades that I'm looking to take in the coming week. So the date is currently the 30th of November 2023. I should really be putting these videos out before the week starts, but nothing really happened at that point. The markets were moving really slow and I was moving really fast. For those that saw, I was out in Dubai, met up with some business partners. Recommend everyone go out there. It's a really inspiring place to be, seeing all the nice skyscrapers and just seeing like guys like Damak and Imar and all these people that have built huge skyscrapers and built huge billion-pound businesses. It's a really good environment to be in. You treat like royalty, everyone's respectful, no one dares steal anything. So recommend everyone go out there. But yeah, I've been moving around pretty fast and the markets have been moving pretty slow. So it only made sense to wait out for a few days so that I can actually update on what's happening. Otherwise, it would have been a pretty pointless video and then things would have happened in the market a few days later, as they have, and you guys would have missed it. So I've left it a few more days more than normal, and we've had some positions play out, some entries. So got some good things to update upon this week. But anyway, moving on. Since last week, we've had, like I said, the market's been moving pretty slow. We've got a lot of NFA pairs, so nothing's really happened on them. We've had a day trade on CAD Swiss, which was given out for the VIP members in the Discord. We've hit TP1, we've hit TP2, just waiting on TP3 to be hit now, but that made 1.83 total when we've adjusted for taking 50% at TP1 and taking 25% at TP2. Still got 25% of that position running. We've had a few break-even pairs on some stacks. We had one stop loss hit on a stacked position. So from the first position, you'll see later in the video, but from the first position, we'd made well more than 1%, and then we stacked that for another buy, and then that got hit. So overall, from this as a collective trade, we still made profit. It's just a stack position hit stop loss. So you'll see more about that later in the video. And then New Zealand JPY, TP2 got hit, making 0.75%. So this week, total change in positions is we're up 1.58%. So let's get into what that actually looks like on the charts, how the strategy made 1.58% this week, which is coming off the back of 2.5% last week. So within the 2 weeks, we've made 2 or 3 weeks, we've made about 4.1% in about 2 or 3 weeks. So that's pretty decent to say. It's swing trading, higher time frame. The minimum time frame I sort of look for is the 4 hour. So I don't really go any lower than the 4 hour. For positions anyway, maybe just out of looking for sort of lower time frame structure as pricing is our zones, but the strategy works on 4 hour and above. What I'm going to be going through this week as standard is all these swing trades on the higher time frame. So for you guys that aren't trading full time, it's a lot easier for you to catch because it plays out a lot slower. You got a lot more time to enter. If you're in a 9 to 5 or at work, then these are kind of perfect for you. This is how I started trading when I was working, swing trading, so that I didn't have to be on the charts throughout the London and New York session, because obviously I was at work. So swing trading is a very good practical way to trade if you have a busy life. And even to this day, I've got a lot of business that I run outside of trading, so I don't want to be sat on the charts every day in front of the computer. I want to, be living my life. So this is a good strategy for you guys if you are looking for a sort of similar setup where you're not glued to the charts 24/7. You can actually go out, live your life, and still make very good trading returns. So enough talking. Aussie JPY, this position is still playing out. Was TP2 hit? No, TP2 hit last week. This week, no further action. We're just sort of waiting for it to go up to TP3, which is this thick green line, which will be about 6.4 R total. We took one TP here. We took another TP round about there. And yeah, we're just waiting for TP3 now. So how did we take this trade? We had one touch, two touch, third touch. So here was the sort of trend line support that we were looking for. The EMA held support. So we had inkling that the EMA was also going to be a support area, which it was. We had previous structure around about this level as well. You see price didn't close below, price used as support, price used as support, price used resistance, support. So we knew this whole zone in conjunction with this trend line and this EMA was going to give us a pretty nice entry as well. Furthermore, the thing that helped us out for our stop loss and take profit is Fibonacci. Let me remove this recent one. Is the Fibonacci retracement. So the zones that I like to look for is between 71 and 78.6%. However, there was a triple bottom here. See what that looks like on the daily. So it's more a double bottom, sorry, on the daily. But I was basically looking for this area to be liquidated. So you can imagine there's a whole load of stop losses below that level, and also people with stop orders looking to sell when it goes below that level. So market manipulators tend to liquidate these zones in conjunction with everything else told us that this was a very good entry point. So that's where we entered, and you can see price literally wicked below, tapped us in and shot up higher. And this is playing out nicely for a nice 6.4 R total there. We will look for a stacked position if it's suitable, if we've got the necessary sort of wick rejections when price comes down here. But similar setup again. We've got 1 touch, 2 touch, looking for that third touch. The EMA is still being used as support. We've got solid area of structure where you can see resistance, support, resistance. So the 95.5 level has been respected very nicely in the past. It'll sort of coincide with a trendline third touch. It'll coincide with a EMA. If it coincides with the fib levels that I had on before, see where the last significant low is, could call it there. Then this could look like a nice trade. So we'll just see how this one plays out. But there's one signal for you guys, 3.9R. If price comes down from here, gives us the relevant wick rejections and nice candlesticks, then we'll look to take an entry. We won't look to just blindly set a buy limit there, because obviously price could just crash and fall through. So that's not what we do. We wait for price to come down, see if there's the necessary candlestick rejections, see if price is obeying sort of all the other confluences that we've got, and then we'll look to take an entry. For my trades, I take 50% of the position at TP1, which I have at the last sort of key area, which would be the 0% on your fib. I take 25% off at the 23% fib extension, and then I take the final 25% off at the 61.8 fib extension as well. And then I'll either put my stop loss at the 105% retracement or the 110 retracement. Here I'm going to choose the 105 just because it is actually below the low. Sometimes I'll put my fib at like one of the opens or like one of the candles into the wave, and then that's when I'd either use the 110 or even just cover the low. But yeah, in this situation, this is what I'm looking at so far. So we'll see how that plays out. CAD Swiss on the 3-day/weekly, it obeyed the weekly a lot better. Obviously, we had this huge wick which was scarily near the SL, but the SL was covered above the previous high. Because we confirmed we are in a bear trend, obviously you've got lower lows, lower highs, lower lows, lower highs. So if this would have hit our stop loss, it would have been a higher high, which goes against bearish sentiment. So it didn't. Price remained bearish. We didn't get tapped out. And then we hit TP1 last week, which made about 2.1 R, so 1.05%. We cashed out. Just waiting for price to keep dumping. You see we've got 1 touch, 2 touch, 3 touches. in line with EMA, etc., previous structure. So this gave us enough reason to enter. We've cashed out, we've made some profit on this. Furthermore, we look to stack on a day trade. So here's what that looks like for the VIP members. The VIP members got this signal for this this whole analysis beforehand, where to enter, when to enter, where to set the levels, etc. So here on this level getting liquidated, this exact high there, we set our entry after we had sort of significant rejections. You'll see price wicked above, failed to close above, came back down. So this is one time that price couldn't break above our level. What that means for you beginner guys who don't really understand that is, imagine that as soon as price enters above here, the market is determined price isn't worth that much, okay? So it starts to fall down. What we're saying when we're trading here is that I'm going to sell price for this amount because it's not worth anything above that. When price has gone above and wick below, the market has confirmed that by saying that every time prices came above, it's from people buying CAD Swiss. When it came above, institutions and sellers have immediately said, nope, I'm selling it. Prices changed hands and prices fell down. Tried it again. Price broke above. Couldn't close above. Every time it came up, people sold it and it came back down, you see. So the exact level that we called, and the reason we called it was from this previous high. Every time price came above there, it couldn't close above. So yeah, when price did sort of come up in the tick candle and make a higher high, I was a little bit worried, thinking, oh, it's going to hit the stop loss. But no, price dumped down. And as you can see, it's now all the way down here. We've took TP1 at this level and we've took TP2 at this level. So what does that mean? It means when price got to the previous low, we took 50% of our position out. So here was sort of one trade, how that sort of looked playing out. So 2.22R, we took 50% out, so we made 1.11%. Second take profit based on the 23% extension. When price got down here earlier today, we took 25% of this out. So you can see it was about, I think I've just called it a 3R or a 2.95. 2.92 I called it. You could even say it's more than that, but I'll be a bit too honest and say it's a 2.29 if we account for spreads and everything. So call it a 2.29, cashed out 25%, so that made 0.73. In total, this is a 1.83% trade so far. Still waiting on it to sort of come down and hit our third take profit to make a 4.12R total trade. So this is a great example of how we have our sort of top-down analysis from our swing trading, and then inside the VIP group is where I'll give away sort of the day trades, like the faster time frame trades that I'm looking at. I wouldn't really be able to do weekly analysis on its own of day trades. So inside the premium group, inside the VIP channel in the Discord, I give live updates on my thoughts, when I'm entering positions, when I'm looking to enter positions, when we get stopped out, when to take profits, etc., etc. So if you do want sort of faster trades that are sort of better for passing prop firms a lot quicker and making more profit in total, then join the VIP group. It's currently about £40 a month, which is really nothing compared to what you can be making trading prop firms or trading live capital. So yeah, here was a good example of where we've got our overall top-down bias from the swing trades, and then we can sort of utilize that to jump in on a more microscopic level and take trades within that same sort of direction. So imagine you've got a river that's flowing. When you're taking a trade, it's sort of like just letting price swim downstream, right? You don't want to fight the trend. You don't want to like be taking buys if on the higher time frame you know it's selling off. So exactly that. The trend is your friend. It's good to use the swings as the trend and then hop in, and you can sort of take and make more profits trading in the same direction using a very similar setup, like almost identical setup. There's just a few things different, which I go over in the VIP channel. But yeah, that's our CAD Swiss. CAD JPY. We are still letting this first position run. Hit the first two TPs on that, 5R total. Second trade, we got stopped out at BE here. It just is what it is. Didn't hit our TP1. It came above our sort of level where we called out break even. I was about to give that away, but that ain't no free knowledge. So in the VIP channel, I'll tell where I go stop loss to break even to all the members. But this one came up, came down, hit us at break even. It's sort of reversed straight off that level, off the EMA again, you'll notice. But I'm not looking to take another trade because we've got sort of previous highs here. Price is double topped at that previous double top. And if I were to re-enter here, I've probably got a little bit of revenge trading in me because I've just been stopped out of my previous position. So I'm not looking to take another trade there. That can get wiped off, and I'll just make a note to myself not to trade there and just let this first position run. Because I'm in the first position anyway, so I've got no need to sort of be greedy. Good trading psychology is not to revenge trade, so we're staying out of that one for now. Euro, Aussie dollar, same thing. This one got tapped out at break even after it came up to our break even level, came out, tapped us out at break even, so no re-entry there. Take that one off. Again, we're still in a previous position, so we're just going to let that one run. We're not even missing out if price does take off because, you know, we're still making profit from this one. Euro Swiss. This one had a big sell-off today. We've got one touch, two touch, which is kind of two touches in itself, but it's more of a cluster because it happened so fast. But anyway, we've got this downtrend. We've got the EMA that was used as resistance, so we looked for it again. Once price came up, we had solid rejection candles showing an area of supply. So we've got a doji / shooting star, we've got a doji, we've got a big shooting star there, or inverted hammer. And then these two form together one tweezer top. So you can imagine this whole area is just one big, bless me, sorry guys, I had to sneeze there. As I was saying, this is one whole area of just 3 weeks worth of consolidation and indecision. So when you've got price, this is what we look for, guys. So you've got price coming up, you've got price indecisive, and then you've got price selling off. This moment here is what we want to wait for, okay? So you don't just want to blindly set your sell limit there, okay? You want price to come up from the buyers. You want indecision, where buyers are sort of selling all their orders through either closing out their winning positions or people getting stopped out from sales. In this section, this is where we want to be sort of looking for trades. So this is exactly what happened here. Price came up, we had an indecision, we got in the trade, and then price is now dumping off. So everything going to plan with that one. We've now gone to break even there. This will be a 7R trade total. Just waiting for it to hit TP1 now. We're at break even. So that one's playing out pretty well. Euro GBP. This one didn't play out so well. So we had our previous position. This one hit TP1 and we made 2.33R. So took out 50% there. Pardon me, guys. So we took 50% out there, 2.33. So that was about 1.16, 1.17. We cashed that out, and then price came down and it hit our break-even level on that one. In between that, we were actually looking for a stack. So what does that mean? It means that we are, after we're in a trade, and, oh, fuck's sake, I just took that out of the thing. Let me add that back. So what does that mean to stack? It means that when we're in a trade, and we see another setup here, so you'll notice price is obeying the trend, price is obeying the EMA. Here was an area that we looked to take another position. So we took another position. It had all the relevant entry criteria, but this one just took a loss. So we took minus 1% on that. It happens, guys. Trading is it's not 100% win rate. In fact, with this strategy, usually I lose more than I win. But because my R's are obviously so significant, we have an edge. So what does that mean for people that sort of think that's a red flag to say that you lose more than you win? So, right, guys, so as I was editing the video, I've decided I'm actually going to hit the nail on the head with this point. I don't want to skip over it. because it's really important to understand. So, for example, if we have a trade that is 4.33R, we're taking 25% here, 25% there, which is about 3.06, I've called it. And then we take 25% there, which is 2.33, I've called it. So I've even been quite reserved in those TPs there. If we take 25%, 25%, 50%, or in the right order, 50, 25, 25, the first TP is 1.165%, second TP is this percent, third TP is this percent. Total adjusted, 4.33, as I've called it, becomes about 3%, right? So you've got your actual return, you've got your R return, adjusted for your partials. We've got a factor of about 0.7%. So what does that mean? It means that if we're reading 4.33, we times that by 0.7, and then we end up with what we actually sort of realise at the end, right? So so if we're trading minimum 3.5 Rs, we're actually taking about 2.45% on those trades, okay? So if we say we have a 40% win rate, what does that mean? It means 4 out of 10 trades win, 6 out of 10 trades lose, okay? So when we win, the minimum win percentage is this, okay? If it's 3.5R, the minimum win percentage is 2.45%. And then when we lose 1%. So every 10 trades, we have 4 lots of 2.45%, which is 4 times 2.45 is 9.8%. And then 6 lots of -1 is -6%. So every 10 trades, we have 9.8% minus 6% equals 3.8% every 10 trades, okay? So every 10 trades, we make 3.8%. So that might not sound like a lot, but here's a very simple way of looking at it, right? Let's say you've got a coin, and every time you flip that coin, you make 0.38% every time it lands, right? So if you had a balance to just place on that, like imagine if you're trading 100k, right? So if you've got a funded account for 100k, every time you take a trade, you've got 100,000 times 0.38%. Every time you have a valid setup, you're going to make £380, right? So imagine you've got 10 trades a month. 10 times £380. You're making 3,800 a month. Yeah? Now, think about how much you're making in 9 to 5. Okay? Is it 3.8k a month? 3.8k a month per year. So 12 months times 3,800 is about 45.6k per year. Okay? And that's just with one funded account. That's with 100k funded account. Okay? And this is the average. This isn't like a good month. This isn't a bad month. This is like on average. Here's the mathematics to say if you're taking 3.5R trades at a 40% win rate, adjusted for our partial profits, here's the maths, guys. Like here's the strategy. This is literally what you need. Here's the win rate. Here's how much we make when win. Here's how much we make when we lose. On average, here's what you're going to make, okay? So now, obviously think you've got more capital, that's going to compound. You've got a fucking 1 million in funding. The maths carries through, guys. So it's really plain and simple like that. if you're trading minimum 3.5 Rs with a 40% win rate, you have an edge on the market. You just got to keep trading and you're just making money. It's just cash flow, okay? Now consider that a lot of our trades aren't 3.5 R. That's just the baseline, okay? So this one was 4.4. This one was a 6.38. This one's going to be a 3.9. This one was 3.9. This one was 4.6. This one was 5. This one's going to be a 7. Okay, so just understand 4.5, 5.2. Just understand that a 3.5 is the baseline, but a lot of what we trade are above 4s. Okay, so yes, the maths might say the minimum we're going to make is 0.38%, but understand that's a minimum. And then on the other side, also understand how probabilities work. Okay, so it doesn't mean that every trade is going to win 0.38%. Over 10 trades, 6 of them are going to be losers. And you're going to have to deal with that, losing 6% every 10 trades. However, there's going to be 4 trades on average within that string of 10 trades, and that's where your edge comes from. So don't be worried about losing trades, guys. With this strategy, you will lose more than you win. But because you win so much more than you lose when you lose, you have an edge, and that's just how the market works. Like, you just have to be comfortable with your statistics and what you're actually doing. And we have an edge. So yeah, don't be disheartened that you lost a trade, because you will lose trades. You'll lose more trades than you win when you use high Rs, but that's just how trading goes. You've got to be comfortable with it. So moving on, hopefully that's a useful analogy. Moving on, pound Swiss, 1 touch, 2 touch, 3rd touch, structure, fib level, wick rejections. Price came up. We actually got a really good entry here, where you can see price like perfectly tapped this wick. Price did come up and retest it, but it's now dumping off. So waiting for this one to hit our sort of break-even level and then see how it goes. But it's looking really positive. The pound Swiss has been really bearish this year, and it's just continuing to fall off. So we're looking to take trades to the downside. We had a sort of sell on the weekly earlier in the year, in June, which is still playing out. We've hit the first 2 take profits when price came down there, but looking for that to continue selling off. We've managed to get a stack as prices came back up, gave us another relevant entry, and then we're taking price lower. New Zealand JPY, 1 touch, 2 touch, got the 3rd touch, got a psychological level within the fib zones. We got an area of previous resistance that we look to use as support. Everything, you've seen how it goes, guys. Everything works out when you've got these confluences together, about 4 times out of 10. If it doesn't work out, you lose 1%. If it does work out, you make enough to have an edge. So here we see price came down to that level, failed to close below the 87 level, which means we called it perfect. As you can see, we've got a whole back test of data showing us that this was a key level. So we scoped it out. Price failed to close below, pushed up to the upside, and this is where we hit our TP2 recently. About 3R total. We took 25% off at this level, so that's 0.75%. On TP1, we took 50% of 2.25, so about 1.125. So yeah, now we just wait for this to push to the upside. I think I will look for a stack on this position. I'll give that analysis away in the VIP group. US dollar Swiss. Again, 1 touch, 2 touch, 3rd touch. Price failed to close above the level, which you'll notice is quite a trend with this strategy, because we call the levels pretty pinpoint. If price does retrace above, it's usually just a wick and then it comes back down. So this one is at break even. So what does that mean? It means that our stop loss is where we entered. So worst comes to worst, price reverses up here and we just lose 0% because we closed the position at the same price we entered. So this one's risk free. Just waiting for it to hit TP1, which would be 2.9R. And then the total trade is about 5.25R as well. So within this video, I've showed all of my open positions, how things have changed over the past week. You saw where we took our profits. You saw an insight into the day trading strategy. You saw me looking for a stack here. which is one signal. You saw me looking for a stack. Where's the next stack? On this one. So that's the second signal. So that's 2 free trades that I've gave away so far. The next one I'll give away, not the day trades, is Aussie CAD. Okay, so Aussie CAD, 1 touch, 2 touch, 3rd touch. Looking for this area, which is previous structure, which is also quarters level, 0.8825. What is a quarters level? It's a multiple of 25 pips. So here you've got 25 pips. 1 pip is obviously the second decimal from the end. So this is 25 pips for those who need to learn how to read pips. You have price broke out of this big downtrend, broke out of it, retested that previous resistance used as support. So now we're looking for price to sort of trade higher. That's what we're looking for. Okay, so we're looking for our entry strategy to tell us where price is going to come down to, take an entry, take price higher. Pretty simple. Okay, this strategy works on sort of higher high, higher low logic. Whereas if you've got higher highs, higher lows, you're in an uptrend, so you should be looking to buy. And then on the other side, if you've got lower lows, lower highs, you're in a downtrend, you should be looking to sell. So we look for the top-down analysis where we can see prices in an uptrend. Here we've confirmed it. You had your lower lows, lower high, lower low, lower high, lower low, lower high. Here we had a higher low, broke out, had a higher high, had a lower low. Higher low. Now we've got a higher high, and we're looking for the higher low to take the trade, push it higher. This one needs updating. This will be a 4.8R trade, there roundabouts. Our stop loss will be below the last significant low. So if price breaks below that, it's telling us that we no longer treat this as a low, potentially. If price breaks below that, we've got a lower low, so we're no longer looking for higher high, higher low logic. So yeah, here's a trade I'm looking at. I'll wait for price to come down, see if we have these sort of relevant candlestick rejections, and then at that point we'll take an entry and we'll take price higher. So hope this has been an educational video. You've seen the trades that I'm in so far. Hopefully that sort of proves the strategy to you guys. You can check yourself with the videos that I've made from last week and the week before that this strategy works. I literally document this live for you guys. There's no bullshit. You can literally see the trades that I'm taking. You can literally check yourself that these aren't no fake charts. These are the same charts you can see and the same charts you can trade. So I hope it's been educational. If you do want further insight into the strategy, because obviously I'm showing you the tip of the iceberg here. If you do want insight into the strategy and sort of how to utilize it for yourself, also utilize it on the smaller time frames, so you're not sort of waiting weeks for the trades to play out. Join the VIP group, links in the description. It's only about £40 a week, and the amount you can obviously make from that, from trading yourself, including trading on prop firms, which this strategy works very well on, then yeah, go check it out. But until next week, hope everyone has a nice weekend, and I'll catch you later.